Hi. Just gonna give a couple minutes for everyone to get settled in. In the meantime, if you guys want to put into the chat where you're joining the call from and what type of work you do with your business, that would be great. That way we can just kind of get a sense of who's joining us. My name's Elizabeth. I am a membership relationship manager here with Collective. I've been with Collective for about 4 years now, and I am an enrolled agent through the IRS. It's nice to meet you guys. All right. We got some people from all over the place. That's always exciting. See a couple of folks in Texas, California. Awesome. Just going to give about 2 more minutes. I hope everybody's having better weather than we are here in Florida. It's been really rainy and gloomy and still really hot and humid. Yay. Awesome. We got somebody from the Virgin Islands. Oh, Florida Keys. Nice. Hawaii. I'm jealous of you. All right. Oh, somebody in Orlando. That's pretty close to me. All right. I think we can go ahead and get started. So today we're just going to cover LLC versus S Corp. Which one is better for you? We have a couple quick just things on our agenda and housekeeping items. We will have a live Q&A at the end of the presentation. So just be sure to put any questions for us in the Q&A box. And then we will have a discount code at the end of the presentation as well. We'll have a QR code for you to scan. So if you stay tuned through the whole thing, that'll be at the end. So today we're going to go over the pros and cons of LLC versus S Corp. We're going to talk about the power of S Corps, how the tax savings work, when it makes sense to switch, and when maybe it doesn't. And then we'll have the live Q&A session. Just a note that this webinar is just for educational purposes, so nothing contained in this or any related webinar should be viewed as legal or tax advice. Always consider consulting a professional one-on-one if you do need legal or tax advice in operating your freelance business. So the pros and cons of an LLC versus an S Corp. The LLC, basically, when you have a single member LLC, a lot of times they are cheaper in terms of pros. They're cheaper to set up, they're cheaper to maintain. There's a lot of less paperwork and fewer formal requirements. You don't have a payroll requirement or a business tax return requirement like you do with an S Corp. So the payroll, when you have a single member LLC, again, it's not a requirement. You just take owner's draws from your business. And the tax status is technically called a disregarded entity. And it sounds mean, but that's exactly what the IRS and the taxing authorities do is they just disregard that you have an entity and continue to tax you as an individual. Because of that, no additional tax returns need to be filed. The cons of running a single member LLC is that all of your profits are subject to not only income tax at your ordinary income tax rate, but self-employment tax at a 15.3% tax rate. And those are just those Social Security and Medicare taxes. Another con would be that your business activity is commingled with your personal tax filing. So, like we just talked about, there's no separation there. There's no business tax return requirement. So, everything is just kind of compiled onto one tax return. And it can be a little confusing sometimes, especially if you're self-preparing. And you may have a little bit less heightened legitimacy. With just a single member LLC, sometimes they can appear to be less established. Usually with lenders, that's where that comes across. And then you can't pay yourself a W-2 salary if you want to. Like if you are trying to increase your legitimacy to different lenders, a W-2 salary a lot of times is a way to do that, and you are prohibited from doing that with a single member LLC. And now let's talk about the pros and cons of an S Corp. So, some of the pros of the S Corp is that you can save on that self-employment tax. So, that's the big one for a lot of people. And again, that self-employment tax is the 15.3%. It's a flat rate and it's on your Social Security and Medicare tax. With an S Corp, you actually save on that 15.3% because it's not going on all of your business profit anymore. It's just going on the portion that you designate as your reasonable salary as payroll tax. Before we talked about it as self-employment tax and payroll tax are the exact same thing. It's just that 15.3%. Payroll tax is a deductible business expense for an S Corp. So that actually lowers your pass-through income, which is also great because that impacts your tax rate. An S Corp, excuse me, also is still a pass-through business structure. And what that means is that there's no double taxation. So if you have a C corporation, for instance, they are subject to double taxation. And what that means is that the corporation itself, the C Corp, would pay taxes on the business profit. And then the shareholders, when they take money out of the business, pay tax on the profit again. With an S Corp, you're not taxed on the federal level. Your business is not taxed. So everything just passes through to you as an individual, and you pay taxes on the shareholder level, avoiding double taxation, which is huge. Another pro is that the business structure requires financial statements and really kind of more in-depth financial analysis than an LLC, like single member, would. So that does support, again, that heightened legitimacy, the credibility, and also just having a better handle on your financial picture because things are not being commingled on your tax return. You have these clear financial reports. It's typically a better financial position. The cons would be more administrative work and related costs. So there are a couple of extra requirements we talked about on the previous slide. The payroll requirement for an S Corp is a big one. Also, there's business tax returns that need to be filed on the federal level, also with the state. Now, again, the federal level tax returns are just informational returns. There's not going to be a balance due, but there's still a requirement to have that filed. And then you also need more formal, in-depth bookkeeping. Another con is the reasonable salary being a requirement for payroll. You have to have yourself on a reasonable salary. With an S Corp, that is an IRS requirement. Uncle Sam just won't have it any other way. You are also limited to one class of stock. So in some businesses, you can have common stock and preferred stock. With an S Corp, you're limited to having 100 shareholders and only one class of stock. And all of your shareholders have to be US citizen resident shareholders. There's also stricter IRS scrutiny on compliance and compensation, like that reasonable salary requirement. You can't be, making $200,000 in your business and paying yourself $10,000 as a reasonable salary. The IRS would deem that as unreasonable. All right, so let's take a look at how the tax savings work with an S Corp. So when you're paying taxes as a single member LLC, you're a solo entrepreneur, you're paying two different kinds of taxes, which we touched on very briefly. So you're paying income tax at your ordinary income tax rate. Everyone kind of has their own marginal tax rate, but individuals can pay anywhere between 0% and 37% based on your tax bracket in income tax. And then self-employment tax is the second kind of tax that solopreneurs pay. And that is again the Social Security and Medicare tax at a 15.3% flat rate. And that is comprised of, as you can see on this chart here, Medicare is 2.9% of that, and Social Security takes up the bulk, the 12.4%. So regardless of, what your tax status is, whether you are a W-2 employee, whether you're self-employed, whether you're an S Corp, you have to pay income tax. And again, how much you pay is just based on your tax bracket. Self-employment tax, you pay as a solopreneur on your entire business profit. So if you're making $100,000 take home, you're going to pay self-employment tax at 15.3% on your entire profit. It works a little bit differently with an S Corp. You still have to pay income tax on your entire net profit, but where the savings come in with an S Corp is with the self-employment slash payroll tax. So this chart has an example of LLC over here on the left versus S Corp over here on the right. So in this example, this person's business had a $160,000 profit. So after their business expenses, that is their net profit, what they take home. The LLC cannot pay themselves wages, so there's no wages being paid here, while the S Corp owner has themselves on a $60,000 reasonable salary. So the owner distribution would be $160,000 for the sole proprietor and $100,000 for the S Corp owner because they have $60,000 in wages. The amount that would be subject to self-employment slash payroll taxes, the Social Security and Medicare tax for the sole proprietor would be the entire net profit of $160K, whereas the amount subject to self-employment or payroll taxes for the S Corp is just going to be the $60,000 that's on their reasonable salary. So that's all they have to pay the 15.3% on is just their payroll, whereas the LLC has to pay it on their entire profit. The single member LLC is going to end up with self-employment tax to pay in around $24,000, where the S Corp owner is only going to have to pay in about $9,000 in Social Security and Medicare tax, saving over $15,000 in the process. And I don't know about you, but I can think of a lot better things to do with that $15,000 than give it to the government. All right, so let's talk quickly about when it makes sense to switch and when it doesn't. So an LLC may be the best structure for you if you are earning under $60,000 in net profit. So after all of your expenses, if you're under 60K, then an S Corp may not be the right structure for you right now. It may be better to wait until your profit is steadily over that amount. And that's because that's number one, where the self-employment tax really starts to sting. And number two, where you start seeing those strong tax savings. Also, if you have another W-2 job, like say your business is your side hustle and you have a high earning W-2 job over 100K, that could also diminish your potential tax savings because of the amount that you're already paying in and contributing to Social Security and Medicare tax. Social Security tax does have a cap, so it just may not be the best structure for you at the moment. Also, if you're really wanting to keep a super simple, straightforward business structure, you don't want to deal with payroll, you don't want to deal with a business tax return filing, like you just want to keep it really simple, I would say that an S Corp would maybe not be the right structure for you at the moment, just because there are those additional requirements. And if you're testing a side hustle or just getting started, so you really have, maybe not enough data to understand like where you're going to wind up, where your profit is going to fall, how much work and administrative tasks you're already having to deal with. And if you can take on more than that, like if you already have a W-2 job, if you really need a simple business structure because it's truly a side hustle, you would just have to kind of weigh the time that you have to invest in it versus the savings and do like a cost benefit analysis to see if it's the right structure. If you are earning more than 60K in net profit from self-employment, and even if you have a W-2 job, but the income is typically less than 100K, an S Corp could be a good business structure for you. It also could be a good structure for you if you're committed to growing your business. Like this isn't just a temporary side hustle. If it is something like a project, maybe that you're doing on the side for just like 4 to 6 months, then typically we don't recommend setting up an S corp for that. If you want it to be something that you're going to have for the foreseeable future, because it is an investment of time, right? Like getting all these processes in place, getting the more efficient bookkeeping, the S corp accounting set up, getting your payroll set up, having the additional tax return requirement. These are all additional tasks that if it's just a short-term project, it just may not be worth it. If you're wanting to formalize your business on paper for future loans or grants, like we talked about before, especially the W-2 with the S Corp does give you that heightened legitimacy, especially when it comes to lenders. So that is a major consideration for a lot of S Corp owners. And if you just feel that you're ready for a more formal business structure, you're ready to run payroll, you're ready to take on, the ongoing compliance, you're ready to have these extra requirements, then an S corp could be right for you as well. So just keep in mind, these are just general guidelines. The appropriate entity and tax structure is really going to depend on your individual situation, your profits. Certain states and local taxes can also kind of complicate this. That's a bit of a nuance. So if you are curious, we will have a QR code at the end if you do want to schedule a call with our team of business advisors. They can kind of like get the details, the full picture of your situation, and let you know if they think an S Corp would be a good fit for you. All right, we're gonna do a poll, and this is just making sure that these sessions are helpful for you. You're just gonna answer if you like how useful today's webinar was for you. And again, this feedback is just so we can keep making these sessions better and more useful. All right. And here is the Q&A code that I mentioned. So you can use this, you can scan this code to book your free call with one of our team members here. Again, it would be one of our business advisors. So it's a one-on-one call. They can get some insights into your specific situation and let you know if they think, an S Corp would be a good decision for you. If you do set up a call with them, and you end up signing up for our services, we are offering a promo code right now. It's fall50, and you get your first month with us at 50% off. So I'll just leave this up for a moment. And anyone who wants the code can scan it. After I stop sharing, Sarah, who is helping me with the webinar, she's running the webinar, she will post the link in the chat. All right, so I'm going to stop sharing, and then we're going to look at the Q&A. Okay, so Raj, thank you for your question. You have a single member S Corp. Is there a limit on the pass-through income after business expenses and paying yourself reasonable salary? No, there's no type of limit. The real compliance, I guess, topic with an S Corp is really just going to be that reasonable salary. As long as you're paying yourself a salary that makes sense with your income, then you are all good. Uh, if I have more than 180K salary on my W-2 form, should I still open an S Corp for my LLC for another 70K profit? That's a great question, Alexander. Typically, it's not really necessary. And the reason I say that is because if you're getting 180K on a W-2 salary, you're considered a high income earner. So you're already going to be maxing out your Social Security. So there really wouldn't be too much tax savings on the 70K in business income. The only thing that it would save you would be additional Medicare tax potentially if you're hitting that threshold, depending on how you file. And if you do file joint with a spouse, if they have income. It's typically like if you're filing single, I believe it's capped at, or you start hitting the threshold for additional Medicare tax at 200K. And if you file joint, I believe it's 250. In that case, you would be paying an additional 0.9% in Medicare tax, bringing it to, I think, 3.8%. So there can be a bit of a savings on the additional, but it's typically not an astronomical savings. So you would have to kind of decide if it outweighs, kind of all the administrative tasks and administrative um, burdens that do go into having an S corp, the additional payroll, the additional tax return requirement, usually having somebody like collective help you manage the business because there are more nuances. So, like paying a fee for help, all of that would probably not outweigh the tax savings would not outweigh all of the administrative work. So, in my opinion, it probably wouldn't be the best decision for you unless your W-2 job went down, like the salary went down to below 100K in the future. Okay. David has two questions. Perfect. If someone in sales has a breakout year and goes from 40K to 200K, but could easily go back down to 50 or 60 next year, is an S Corp worth doing? Um, it depends on what state you live in, first and foremost. Um, it is again, some states have local state taxes that could definitely make it not worth it. If you live in a state that doesn't have like a franchise tax or even state taxes, then like if you live in Florida or Texas, it could totally still be worth it at 50 or 60K. 60K is really like the threshold we recommend for most states. So 50K isn't too far below that. Some CPAs do recommend S Corps at 40K. We're just a little bit more conservative here at Collective because we factor in the cost of our services. We want to make sure that our members are seeing a tax savings, and 60K usually aligns with that. But nothing bad is going to happen if you do dip below that 60K. If you hit 50K or 55K one year, you're not going to get any penalties. You're not going to go to tax jail. You just wouldn't see as significant of tax savings. So, if you're within that range, it definitely could be worth it. I would suggest scheduling a call with one of our business advisors to just kind of talk to them one-on-one through everything. They can get more information from you and make a better recommendation. Okay. Janelle, I don't remember ever paying the additional tax Medicare and Social Security as a sole prop in New York. Where would that have been listed? So that would have been listed on your personal tax return. That's where everything goes. So, like if you have a sole proprietor, or single member LLC, you would file a Schedule C as part of your personal tax return. That calculates everything, all of your self-employment tax is what it would be called. So that would have been paid on your 1040 personal return to the IRS, and you would have paid taxes to New York as well on your New York tax return. Okay, Anna is asking, does this mean the owner's salary is exempt from taxes, or what percentage would be taken out of this $60,000 salary? That's a great question, Anna. So the owner's salary isn't tax exempt. You're still paying the taxes, the payroll taxes on your salary, and it's still a flat rate of 15.3%. So 6.75% would be paid by Anna as the employee, and 6.75% would be paid by Anna as the employer. So as your business would pay half of that. The payroll taxes that your business pays are a business expense, and your salary itself is an expense for your business, but you do still have to pay payroll tax on your salary, just like you would if you were a W-2 employee for any other business. The good news is that the taxes that you pay, your withholdings that are withheld from your paycheck, do go towards paying off your total liability on your tax return. So it still counts. It's just taxed in a different way. And again, it's at that 15.3%. And if you don't have an S Corp election, you pay that 15.3% on your entire business profit. Whereas with an S Corp, you just pay it on the salary. So let's say you're making $200,000 per year. Actually, let's go with the example. You're making $160,000 per year, right? If you're a single member LLC or just a sole proprietor, you're paying the 15.3% on the entire 60K. If you're an S Corp, you're going to pay yourself a $60,000 salary, and that's where you're paying the 15.3%. Okay, David, can you retroactively change to an S Corp? Yes, you can. The IRS does let you backdate for a period of, I believe it's 3 years. At Collective, we do have some internal boundaries around when we do the retroactive S Corp elections because it is a large administrative burden, especially if it's for a prior tax year where you've already filed a tax return. You will have to go back, file an S Corp return for those years, and amend your previously filed returns. So that's something that we don't do because it's a large undertaking. Most CPAs that even offer that type of retroactive S election are going to charge a pretty hefty retainer. Um, we kind of portion it out through like 2 times in the year. So right now, if you're going to be onboarding and looking to retroactively S-elect, and you already have an LLC set up, that's a very important part of this. If you don't already have an LLC, you can't retroactively S-elect. You have to have an underlying legal entity already in place to be able to elect that entity to be taxed as an S Corp. So there's like a step in between. You can't go from sole proprietor to S Corp because there's no entity in between to attach the S Corp election to, if that makes sense. So again, it really just depends on your situation. If you do book a call with our team and you kind of give them all that info, then they'll be able to let you know how far back we could backdate your S Corp election. Can the S Corp pay life insurance premiums for the owner? Typically, you just run health insurance through your S Corp. Okay. Oh, Sorry. Okay. Joy, a B Corp. Unfortunately, I'm not very familiar with B Corp's Joy. That would be something that you would maybe want to talk to like an outside CPA about. At Collective. We just focus on LLC based S Corp. So unfortunately, I don't have a ton of information on B Corps. Okay, Jason, currently have an LLC as a sole proprietor, maybe growing into an S Corp. You're putting together another side hustle, but with a partner. What entity would you recommend for that business partnership? So you could just do a partnership LLC, like a multi-member LLC, just so that way you guys have the liability protection in place. And then you also have tax flexibility with the LLC. So if you did eventually want to set up an S election for your new side hustle, you have the flexibility to backdate your S Corp election because you have the underlying legal entity in place. Having an LLC is always a great idea as far as I'm concerned because you get liability protection. Now, certain states do have different franchise taxes. So that's something that you maybe would want to research specifically if you're in New York City or California or Tennessee. I would just say go ahead, research the franchise or S Corp taxes in those states and see if it would be worth it. Okay. If I have my LLC inside a self-directed Roth IRA, will I have to pay any tax? Unfortunately, that is not something that I will be able to answer with the limited information that I have. That's something that you would really want to talk to your financial advisor about. Okay, Yolanda, what are the ramifications if I file an S Corp and my business income drops below 60K? Is there a downside if I have a bad year? Not at all. No ramifications. Again, it would just be that you would see less significant tax savings that year, but nothing bad is going to happen. There's no penalties. Yeah, nothing like that. Yeah, you wouldn't see as high of tax savings as you would if it's over 60K. David, further info on my retroactive change question. This year I'm a high income earner. Last year I was not. Next year, no guarantee. Can I still form an S Corp this year for next year's taxes? So, yes, you can. Depending again on if you already have an LLC in place, you could potentially backdate, Collective could backdate you to, I believe we would go back to July 1st of 2025. Um, another CPA may be able to take you back further, but there's probably going to be a higher fee. But if you earned a lot of money in the beginning of the year, I would say that it may be worth it depending on when your payments came in. Because if we take you back to, and this is again, if you already had an LLC in place, if we take you back to July 1st, we'll rebuild your books to July 1st, but any money that came in from January through the end of June would be filed on your Schedule C. So you would have kind of a wonky year where you would have to file January through June as a sole proprietor or sole proprietorship LLC. And then you would file July through December as an S Corp. So depending on when your payments came in, if you're expecting, a lot to come in before the end of the year, it could still make sense to backdate to July. But if you got a lot of money in the beginning of the year, you may want to explore a CPA who could backdate you to January 1st. Bernice asked, I'm an LLC. Can I elect to be taxed as an S Corp? Yes, you certainly can, Bernice. If it makes sense for you in other aspects, I would definitely set up a one-on-one call with one of our business advisors, and you can just ask them any questions you have. They can kind of go over your individual situation and let you know if it makes sense. Okay. David, you live in Wisconsin. Okay, cool. So you don't have a ton to worry about in terms of state franchise fees then if you live in Wisconsin, so it definitely could be worth it. Okay, Lewis, I am a brand new real estate agent. Would I just open an LLC for now until I make more than 60K, then switch it over to an S Corp? Also, my dad is starting a rental portfolio. Should he place them in an LLC or S Corp? So those are really great questions. I think that your gut makes sense, like your gut instinct of just opening an LLC for now until you know what your income is going to do, and then potentially doing the S Corp election at that time is a really smart move because, again, you're making sure that you have that liability protection, and then you're also giving yourself tax flexibility. And tax flexibility is the option to have an S Corp election and be able to backdate it. So, like I said, if you're just a sole proprietor, you can't backdate an S Corp election because there's nothing to attach it to. But if you have an LLC in place and things really take off for you, then you don't have to miss out on tax savings. You could potentially do a retroactive S Corp election. For your dad, that is really going to depend on the specifics of what he does. If he is a real estate agent himself or a property manager, somebody who works in real estate, it could make sense for him. If he's just, somebody who is going to be renting out homes, like either doing like Airbnbs or long-term rentals or flipping homes, but he doesn't have like a profession in the real estate industry, then there wouldn't really be a benefit to having them under an S Corp in order for um, you to experience S Corp tax savings with properties. You do need to be working in that field. It's an IRS guideline because it's not considered self-employment income unless you're like a real estate agent or a property manager or somebody else in that industry. So if he is a realtor or property manager, then he could explore putting them under an S Corp. If he's not, there's no point. He's not going to get the tax savings. He could just put them under a regular LLC. All right, Scott, if I have a sole proprietorship and an LLC, two separate businesses, do I need to have separate bank accounts? Great question. And yes, when in doubt, separate. The IRS hates it when we commingle. So, like if we have two different businesses in the same bank account, or we have business expenses in our personal bank account, they really don't like that. So, I definitely recommend having separate bank accounts for your separate businesses. Rebecca, can you give us a quick overview of a C Corp, please? Yes, so like I said previously to another attendee, we do just focus on S Corps here at Collective, but just generally speaking, with a C Corp, the main reasons you would want to set one of those up is number one, if you're looking to receive outside funding. Number two, if you want to have more than one class of stock, like if you want common stock and preferred stock. And number three, if you need to have more or you want to have more than 100 shareholders, a C Corp could be more beneficial. Just keep in mind that that does involve double taxation, taxation on the entity side and taxation on the shareholder side. Lewis, I guess the better question is which holds the best possible protection for rental properties? That's really just going to be the LLC. So the underlying legal entity of the S Corp is going to give you the liability protection that you need, regardless of whether you have an S Corp election or not. An LLC will be perfectly sufficient for that. Okay, John, follow up on Raj's question. If I'm married filing jointly and my wife is a W-2 at 260K, and then brings in 50K in 1099, should we remain as is or move to S Corp? Or if we don't move to an S Corp, at what income point should we move to S Corp to make more sense? So if this is for your spouse's 1099 through their LLC and they also have a W-2 at 260K, same kind of deal. It really wouldn't make sense to move to an S Corp unless the W-2 income dips below 100K. That would make a lot more sense. Um, Social Security is everybody individually has their own Social Security cap. So that's on an individual basis. So, like if it's your business act, like if she has a W-2 job and you have a separate business, that wouldn't matter. Medicare is assessed as a couple if you guys file joint, but Social Security is individual. So at what income point should we move to S Corp to make more sense? It's really going to be if the W-2 dips below 100K, but you can totally set up a call with one of our advisors, and they can kind of give you more details on that. Okay, I have 4 rental properties. Should I put each under individual LLCs? And how would the tax reporting work for federal taxes? So, Rita, you can have individual LLCs for your rental properties, or you could chat with a CPA that maybe specializes in that type of activity. Some of them will set up like a holding company where you can kind of have like multiple LLCs under one parent company. I know that's a lot of strategy, or that's a strategy that's pretty common for real estate investors. That's not something that we would handle or support here at Collective. We don't work with any type of multi-tiered business structures, but they are a popular choice for folks that have a lot of property. So I would just suggest reaching out to a CPA in your area that specializes in that. Okay, Joy is asking, is it better to file my business in a state such as Delaware where taxes are more lax? Not sure how to properly phrase. So, no worries at all. That's a really common question that we get. And the answer is not really. And that's because even if you were to file in Delaware, if you're not living in that state, if you're living in, say, California, you still have a requirement to file and pay taxes in your home state of California. So you would at least need to foreign register your business in your home state of California, which means that now you're effectively paying to maintain 2 entities, one in Delaware, one in California. You're having to file 2 annual reports, one in Delaware, one in California. You're having to file taxes in both states. A lot of times it can just add up to more of a headache than it's actually worth. And every state does have statutes in place that require you to be registered in your home state. So they could fine you, they can impose penalties. Some states are stricter than others. Some states will fine you every single day until you register in their state because you're considered to be illegally transacting business in their state until you register. So I don't really recommend it. I don't really think it's worth it because it just is like double the headache as far as I'm concerned. But we do have folks that do it. So if it is something that you want to do, we're not opposed to helping with that, but it's just typically not really worth it. Okay, what if you don't work in the business and you have employees, would you still give yourself a position and pay yourself reasonably? Also, how would one take distributions consistently? So, if you're not working in the business and you have employees, you would still have to pay yourself a reasonable salary because you would be taking distributions as the business owner. So, you would still have a requirement to pay yourself a reasonable salary. We could help you calculate what that would look like. Also, for distributions, if you're wanting to take them consistently, you can kind of like do the math and figure that out just based on the amount that you would be taking as a distribution every month. You could figure out what a reasonable amount of payroll would be, and you could take the rest in distributions. You don't necessarily have to take consistent distributions though with an S Corp. There's a lot of flexibility there. Like if you have a really good period, a really like strong period for your business, you can kind of take more distributions and take less when things are slower if you need to. Distributions can really be kind of dictated based on the financial health of your business, but the main thing is just to avoid draining your business bank account. We recommend keeping at least 2 months of business expenses, including payroll, in your business bank account as a buffer. That way, nothing's going to creep up on you. If there are unexpected expenses, you're not putting yourself in a bad situation. You can deal with taxes, all of that. Okay, Ted, how are the profits portion of S Corp distributions reported on the 1040? So that is a great question. It's just reported as net income from your business. So it all just flows through. The S Corp income is reported on the Schedule C, or I'm sorry, on the Schedule E, and that flows through to your 1040. It gets added to all of your other household income, like if you have a W-2, if your spouse has a W-2, if you have any other like dividends or anything else, all of that gets totaled up, and then they calculate your tax rate, and you pay tax based on your total income and your tax rate. So with the distributions, they are not a taxable event. Again, the whether you distribute the money the year that you earn it or 10 years from now, you're going to pay tax on the business profit the year that you earn it, but you don't pay tax on distributions. Okay. In your example, does the profit consider property depreciation? Because that can reduce the profit a lot. I have Airbnbs. So great question, gang. Um, yes, any depreciation would go on the balance sheet and it would reduce the profit. It would be considered an expense. Again, for Airbnbs, that's something that's a little bit more nuanced. I would definitely schedule a call with one of our business advisors to talk about that further. Yolanda, do you have to file an S Corp in January? And is there a deadline to file? So technically, you're supposed to file the S Corp election within 3 months and 15 days of the start of the tax year. So it would technically be by March 15th, but you can submit a request for what's called late election relief. And you just have to submit a reasonable cause letter. We do this for our members all the time. 99.999% of the time, as long as it's within the IRS's parameters, they will accept the late election relief request. Okay. Mate said, hi, I'm registered as an LLC. My projected income is under 30K. Would you recommend staying as an LLC? Yeah, for now, I would definitely recommend staying as an LLC just until your profit is consistently over $60,000 per year. Okay. Cheryl, our business has been established as a sole proprietor for 20 years. We recently retired and no longer have the W-2 income for tax savings. Will Social Security income affect the tax savings? Also, is inheritance of S Corp different? So, the Social Security income could, no, I don't think it would affect the tax savings. I am not sure about the question about the inheritance. That's something that I think would really be best answered because it does sound like you have a pretty nuanced situation here. I think your questions would be best answered by a local CPA in your area who can really dive into your scenario and let you know if it would make sense for you. And if it would, then, Collective would be happy to support you. But I know anytime there is inheritance involved, it does get pretty nuanced and complicated. And the worst thing I can do is give you bad information. So, unfortunately, I just don't have enough information or expertise in that area to really give a recommendation other than seeking out somebody who would have more expertise in that area. Um, okay, mate, that's the follow-up of your question. I already answered that. I would just stay LLC until you get over 60K. Okay, Lewis, he does not work in real estate. He would just do long-term rentals. He currently has 3 properties and wants me to manage them. Yeah, then an LLC would be just fine because it would give him the liability protection and you can totally manage them for him. But an S Corp wouldn't really make sense because it wouldn't be considered self-employment income. It would, and therefore he would not be able to get any self-employment tax savings. Rita, I have an LLC now and a new business partner. Can you speak to benefits of partnership liability with an LLC? Do we need additional documents for terms and conditions? So, yeah, I mean, you can totally have a partnership LLC. It's great you have that liability protection. You would have an operating agreement where you would want to kind of spell out the responsibilities, the ownership, all of that you guys agree on. That's something that you can either handle with a lawyer or I believe I've heard like Rocket Lawyer can help with operating agreements. At Collective, we just work with single member LLCs. We don't work with any multi-member LLCs at the moment. So I don't have any real specific recommendations for partnership LLCs other than, yeah, you can work with a lawyer or, like I said, a website like Rocket Lawyer. I know they have a ton of contracts and operating agreements on there. Okay, let's see here. Lewis, yes, you could do an individual LLC for each of the properties. Or, like I said, if they're going to be like long-term rentals, you guys could speak with a CPA that specializes. Like some of them are, they have these like boutique CPA shops. They specialize in properties. You could speak with them about maybe setting up some type of multi-tiered business structure for him. And that could be an option as well if he's going to have several rental properties. Okay, he is on Social Security with no other profession. Okay, perfect. Yeah, it doesn't really impact anything because, again, an S Corp just wouldn't make sense because there wouldn't be any tax savings to claim with the rental properties being that he's not in the real estate profession. Um, if I'm not a nonprofit, how do I categorize monies given for business establishment, pitching companies now? So you're talking about funds that you have raised. Those could be categorized as, I mean, you'd really want to check with probably a local CPA, but those could be just categorized possibly as a shareholder contribution, depending on how the money was put into the business. Unfortunately, I just don't really have enough information to give a recommendation on that. It's going to really depend on a number of factors. Okay, Brian recently re-registered my HVAC business as a sole prop, thinking about LLC for protections, but read somewhere I can't change my business as it is to an LLC, that I must have a different EIN, business name, etc. Also, since I have no employees currently, would there be any benefit to go to an S Corp instead of the LLC? That's a great question, Brian. So, with the S Corp, there would have to be an underlying legal entity in place before you could attach an S Corp election to your entity. So, because you're a sole proprietor, you would first need either an LLC or a C corporation in place before you could elect to have your business taxed as an S Corp. And that's 100% correct. Every different entity has to have its own special EIN that is tied to that entity. And you don't need to have employees for an S Corp. One sec, guys. I'm getting over a cold. I have to cough. Okay. So sorry. Anytime I talk for a lot, I always have to cough lately. Okay. Going off Rita's question, is that parent account an LLC as well? Yes, typically that's how it would be structured with like one main LLC and then some subsidiaries. But again, you can check with a CPA that specializes in that, and they should be able to give you more information and details and make a recommendation about whether or not that structure makes sense. Okay. Is there a specific percentage that needs to be met in order to be considered reasonable salary under both LLC or S Corp? So you don't need to pay yourself a reasonable salary if you're an LLC without an S Corp election. For an S Corp, I wish. I wish the IRS would just give us a percentage that would make life a lot easier. Generally speaking, anywhere from like 40 to 60% could be considered reasonable. It just depends on a lot of factors. So we definitely recommend consulting with a tax professional to figure out what a reasonable salary would be. They've been arguing about it in court since like the 1940s. So unfortunately, it's just a gray area. So I definitely recommend seeking some assistance with figuring that out. Okay. Um, what is the rule of thumb for determining salary versus distribution? Is it about maintaining a rough ratio or a minimum amount for salary? So, yeah, I mean it's largely going to depend on your profit from your business. So, it's something that is also fluid throughout the year and can change. So, at Collective, we do keep an eye on your reasonable salary throughout the year, and we will make recommendations like if you need to increase it at any point or if you can skip a payroll if you've already paid in enough. But it is something that is a fluid thing that's tied to labor. Okay. Lewis, so once LLCs are set up on each rental property, then reasonable salary can be withdrawn or paid via check or transferred directly into his personal account. So if he's an LLC with no S Corp election, there's no need for a reasonable salary. He can just take owner's draws from the business at any point. Scott, does Collective provide info or assistance in acquiring business credit, credit line, credit cards, etc., using the business entity? As of now, no, we really don't have any type of resource for that. Hopefully in the future, I know that's somewhere that we're looking to expand to in the future, but as of now, unfortunately not. Thanks, Rita. Lori, is it expensive to change LLC to an S Corp or vice versa? No, it's free to file the S Corp election form. To revoke the S Corp election form is also free. If you do have an S Corp and you decide you want to go back to just being taxed as a single member LLC, you would submit a revocation request. It's just a letter that you could submit to the IRS along with Form 8832, which changes your tax status back to sole proprietor or disregarded entity status. Otherwise, when you revoke the S Corp election, it defaults to C corporation tax status. So that double taxation we've talked about a couple times. Also, if you do revoke your LLC, or I'm sorry, revoke your S Corp election, you cannot re-select that entity for a 5-year period. But as far as whether or not it's expensive, no, it's not expensive, but it is a time investment to change to an S Corp. You have to set up a lot of new processes. So there is an investment of time, but as far as money goes, there's nothing. Uh, okay, I think I answered this one. Lewis, he would just list you as a member slash manager of the LLCs. If he would do that, then that would imply you being a managing member of the LLC would imply ownership. So if this is going to be like a partnership or multi-member LLC, then yes. Otherwise, if you're just managing, he can just pay you as he would any other person that helped him, any other vendor. Sylvia, how do I change my LLC to an S Corp? So you can file an S Corp election form with the IRS. It's Form 2553. You can file it yourself. I would definitely suggest doing some research on the process if you do decide to do it yourself, or that's something that Collective can help you with if you do decide to join Collective and sign up for a membership. I would just schedule a call with somebody on our team, one of our business advisors, and they can give you more information on the process. Ted is asking, can an S Corp give directly to charity as a reduction of revenue? Typically, charitable contributions are just going to be done through yourself as an individual. You can give through your S Corp, but again, most of our members do it through themselves as an individual. Lewis, he could pay you as a contractor, or if your business is an S Corp, he can pay your S Corp. If you don't have an S Corp, you would just provide him with your W-9 and he can issue you a 1099. If your business is an S Corp, he doesn't need to issue a 1099 for you. Oh, thank you so much, Scott. I appreciate it. Appreciate you attending. Okay, A Sands, how to make distributions. So distributions are just a transfer from your business account to your personal account. Again, you can take them at any point as long as you have the funds available in your business bank account. You don't want to rob Peter to pay Paul, but as long as you have like 2+ months of business expenses available, you should be all good to take distributions. You also just want to make sure you have enough equity in your business. So again, that's really just going to be the funds in your bank account, not taking out more than you've earned. Cassie, should an LLC owner wait until the beginning of the year to change filing status to S Corp, or is it okay to do it in any point of the year? Yeah, it's totally okay to do it at any point of the year. If you do it in the beginning of the year, then you'll only have to file your business activity on one tax return, on the S Corp return. If you do it in the middle of the year, you will have a split year where you would have to file a Schedule C for the beginning portion of the year and then the S Corp return for your business activity for the remainder, but it's not too big of a deal. You have to file a personal return either way. So it would just be adding on that LLC activity. But if an S Corp makes sense for you, you absolutely don't have to wait. You can do it mid-year, or you could potentially even backdate. I would definitely recommend setting up a call with one of our business advisors so they can get more information, see your full picture, and let you know if it makes sense. Okay. No worries, Raj, at all. No worries. Um, is it true I can pay my 20-year-old kid? She is in third year college if she helps with admin work, like expense reporting, booking tickets. Can you please explain how this works? Yeah, you totally can, as long as your children are above legal age to work. We don't recommend paying like a 2-year-old like I have, like my son. I could not pay him if I had a business because he wouldn't do anything, right? But as long as she's legitimately working for your business, she's of legal age to work, and she's helping you with administrative tasks, you just pay her what you would pay anybody else that you would hire. Like if you were to hire another 20-year-old college student to help you with administrative work, you just have to pay her the same. Like they don't want to see you paying somebody like $150,000 per year to like work 10 hours a week to help with some like expense reporting and booking tickets, right? So it has to be, again, reasonable, has to be fair. If not, that can be considered like a violation of arm's length transactions. So as long as you're doing it by the book and she's actually helping you, then and you're going to pay her what you would anybody else, that's totally fine. You can just put her on a W-2 if you want, or you could pay her as a 1099 contractor. It's just whatever works for your situation. Lewis, does the parent LLC provide extra protection for the other LLCs? What's the purpose of the parent LLC? Thank you for answering our questions. No worries. It doesn't necessarily provide extra protection. It's just purely for structure to kind of like keep everything in one place if that's going to be the less confusing option. So, like I said, I just recommend talking to a local CPA that specializes in businesses that are for like the long-term rentals. They'll really be able to give you a lot better advice. Like I said, we don't work with any of the multi-tiered structures here at Collective, so to me, they seem really intimidating, and I don't have a lot of experience with them, but I know that they are a really popular choice for folks that do have a bunch of rental properties. So I think that, like I said, I don't want to give any bad information to anybody. I would rather say that like I can't adequately answer your question. I definitely appreciate you asking, but I definitely think that somebody who specializes and that is their area of expertise will be able to give you a lot better of a recommendation. That's just something to consider, right? Like the S Corp for your dad's case wouldn't really make sense, but a multi-tiered business structure could potentially make sense if this is something that he's just going to be acquiring new properties, throughout the next couple years, or he's going to have several properties, it may make sense. Otherwise, they can keep them separate, but either a CPA or, like a tax attorney, somebody like that would be able to give a better recommendation. But thanks so much for all the questions. Okay. And then I'm just going to head to the chat and see if there's anything. Okay. Oh, Candace. Rita, we're basically done. I don't know if you've headed out yet, but we're basically done. Sarah will send out a recording within 24 hours, so if you need to pop off, you're good to go. Candace asked, worst case scenario, if we made a mistake with the designation of our business, say I did S Corp when I should do LLC, is there a penalty? No, there's no penalty. And you can reverse the S Corp election. You can revoke it. You just wouldn't be able to elect that entity again for a 5-year period. Let's see. Lisa said your eyelash extension business is currently an LLC established in Northern Virginia. When do you think I should switch over as a sole proprietor? When you're consistently making 60K in net income would be a great time. Daisy, sorry guys, I'm just going through these questions that were put in the chat. Some of them did not go into the Q&A. So hold on one moment. Just seeing anything I missed. Is there a percentage of income used for reasonable salary? I think I answered a question pretty similar to this, but frustratingly, no, there isn't like a clear rule on that. Generally, anywhere from 40 to 60% can kind of like pass the test, so to speak. But no clear rule. It depends on a number of factors. Jean, can I do a monthly payroll to myself? Yes, you can with an S Corp. That's actually what we recommend. Let's see. I'm confused about the term reasonable salary. The word reasonable is very subjective. Yes, Candace, you and everybody else, I think they make it that way on purpose. Again, it's really just anywhere, just generally speaking, and again, this is not tax advice, this is just what we've experienced, anywhere from like 40 to 60%. It does depend on a number of factors, but that's generally going to be like the safe space where you have good defensibility. I think I should be an LLC because the majority of my income is from my W-2 job and my business is just a side hustle. If I hire my children to work for my LLC, so they can save money. Is it correct that an LLC is still right for me? Yeah, that would be fine. You really don't need an S Corp to have employees. Okay, we got this one. What is the owner able to do with the distribution? Sarah asked this question. Whatever you want, Sarah. It's your money. You transfer it from your business account into your personal account. You can pay your bills. You can go shopping, you can go on a trip, whatever you want. You're welcome. Okay. If I'm currently filing as an S Corp but get a job next year, can I switch down to LLC? Yes, you can just revoke the S Corp election and file the 8832 to return to disregarded entity status. Excuse me. Make about 82K on W-2 and under 10K for my side hustle. I imagine I'm nowhere near ready to move to an S Corp. What's the relevance of the 100K 20 or W-2 threshold? It's just the Social Security cap. The majority of the savings with the S Corp is in Social Security tax. So if you're already getting close to that cap with your W-2, then your S Corp savings will just be more minimal. So that's why we kind of set that in as just a general threshold. But if you have questions, you can just book a call with one of our advisors, and they can give you more tailored information. I have an HVAC side business. We have full-time jobs. We've had an S Corp since 2022 and still learning how to run this business. Income is made around 8K per year. Love to make this full-time. It's been so expensive. Yeah, I totally understand. What percentage of earnings is considered a reasonable salary? Anywhere between probably 40 and 60% is a good kind of guardrail, but it again, that's not exact. Um, all right. Okay, Daisy. Only making, okay. So yeah, right now, if you guys are only making around 8K per year, I mean, the S Corp, like you said, it is expensive. You're not going to get any penalties for being under that 60K, but you're not really seeing the benefits. But if you do think that your business's income is going to increase to over 60K in the next couple years, it's going to be up to you whether you want to revoke that S Corp election for the short term or keep it in place. Again, you wouldn't be able to have another S Corp election for that business for a 5-year period. All right, guys, I do have to hop off the call. I have another appointment. Any other questions, we can try to get back to you. Sarah sent that link to book a call with one of our advisors. If you guys have lots of questions, totally book a call with them, and they can help answer everything. But I hope everybody has a wonderful day. Thank you so much for attending, and we'll talk to you soon. Bye.